Do you know who Rachel Cruze is? Well, for those of you who don't know, she is the daughter of the famous Dave Ramsey. In today's video, we are going to see if she knows her stuff when it comes to tax deductions. Well, hey there. I'm Kimberly Ferguson, CEO and founder of Emerald Expectations Accounting. I'm so happy that you're here. The Emerald Corner is a place where owning a business means building a life you love, not sacrificing one. In today's video, I'm going to be reacting to Rachel Cruze's video titled How to Legally Get Out of Paying Taxes. We all know that she's good with numbers and budgeting. She gets that from her dad. But let's see how good she is with taxes. Okay, let's jump in.
So number one is don't cut corners. So obviously there's some hacks and write-offs and things you can do, to submit yourself to saying, yeah, I don't have to pay, all this money that I don't know, I can write it off, which is great. And we'll talk more about that later. But in general, taxes are not something that you want to be careless about. So when your employer sends a giant folder in the mail that says tax documents enclosed, you want to keep those secure and around to make sure that, you have a good handle on them. Or when you make a tax deductible donation from your church or maybe a local charity, keep that receipt and file it away. Because every little bit, it adds up, you guys, and you'll be glad that you saved those breadcrumbs along the way. So when April comes around, you can write them off.
That's a good tip. I mean, not tax related necessarily, but it is a good tip for preparing for tax season. So definitely don't cut any corners and make sure that you save all the tax documents that you received. See, there's a difference between getting the most in the tax deductions that you're eligible for and being a little shady. There's kind of that line, right? The gray area. So it's okay to kind of walk the line. We love to toe the line, especially here at Emerald Expectations Accounting, but we definitely don't want to jump into that area that is a little bit more shady than legal.
Number two, speaking of April, be on time. Yes, you never want to be the person who procrastinates your taxes, which is so easy to do. And if you don't want to be completely out of options on tax day, make sure to be early. And this is one of those adult things that you have to do. And you'll realize, oh my gosh, every year, this is part of my routine. So you kind of have to suck it up, be on time, do the adult thing. And personally, Winston and I, we like to have ours filed in late February, early March, again, just to keep everything going. So
yes, be on time. That is also a great tip. So the thing is yes, the 4/15 deadline is the deadline, but it doesn't mean that you have to wait until 4/15 to file your taxes. Especially if you're working with a professional, they're going to want your taxes probably well before that deadline to make sure that everything can be filed timely, because unfortunately, you're not their only client. So if you do end up submitting things by 4/15, I would anticipate an extension.
now this brings me to number three, which is work with a pro. So especially if you've had a big life change within the last year, like you're buying or moving houses, changing jobs, getting married or divorced, having a kid, or maybe you got a big raise. Again, when you have somebody in your corner that's a pro that does this day in and day out, it is so helpful. So I'm going to leave a link below so you can get connected with a trusted pro. And even if you haven't had anything major happen in the last year, sometimes, again, it's nice to have somebody to guide you through the process and make sure you aren't overpaying. And Smart Tax is another great resource if you're looking just to do it yourself. And this is great software that you can trust.
Yes, so definitely agree with working with a pro. However, something to keep in mind is that the people who are a part of their pro program are actually paying to play. So they are not necessarily the most vetted. They are not necessarily the most qualified. So make sure that you do the vetting, even if you decide to go through their program, because they haven't necessarily gone through a huge process on their end. So keep that in mind. Now, when I suggest working with a pro are similar situations. So anything that's more than just having a traditional W-2 job, maybe a few itemized deductions, minimal things that you can handle on your own. I totally get that. Definitely work on that on your own if you'd like to. But beyond that, and if you're looking to plan out your taxes or you're thinking about retirement, kind of all that stuff, definitely think working with a pro is well worth the money that you're going to end up paying.
All right, my final tip before we reveal how you can legally avoid paying taxes is to always shoot for net zero. So a lot of people feel like, oh my gosh, I want to get this massive refund. It's free money. It feels so good to get a check in the mail from the IRS later on in the year. But honestly, I'm on the other side of the coin. Ideally, you would owe nothing and you wouldn't get anything in a refund. Like you would find a net zero there. But personally, I would almost rather owe a little bit than get to a point that I'm getting a big check in the mail, because that money, instead of you using it throughout the year to invest it or to give it or to do something with it, it's been sitting over in Washington, D.C., not making any interest, doing nothing. So if you, again, have received a large tax refund, it is not free money. That is your money that you were supposed to have in your paycheck. So you may want to contact your HR department. Again, kind of look at your overall, what taxes are being taken out of your paycheck. And again, sit down with a pro if you want some help.
So her hot take is definitely a controversial statement because there are so many people who want to have that tax refund at the beginning of the year, right? But she's 100% correct in this, in that when you pay in money early, basically you are giving the federal government a tax-free loan, which they love, but isn't necessarily great for you. So if possible, to get to that net zero number, I definitely recommend that as well. It is better to have to pay a little bit. You don't want to have to pay in a ton, because you will see penalties if you end up having to pay in a lot of money. But if you can keep that number, to a couple $100s, then I think they're doing great.
Okay, since we've covered those basics, let's get to the good stuff. And here are some of the tax exemption opportunities that you want to be aware of. So if you're a small business owner or even part-time side hustle worker, keep your receipts. Expenses like office space utilities, company-sponsored work lunches, liability insurance, gas for business trips, supplies for your craft, what you're doing, all of these could be submitted for reimbursement. And every government has its flaw. But one thing I appreciate about ours is that they value small businesses in this way. So the tax exemption opportunities for entrepreneurs are a great example of this. So take advantage of it.
Yes, so definitely keep your receipts. One thing that she said, though, is that you can submit those for reimbursement. So obviously, a small business owner, you can't submit that for reimbursement, right? There's nobody to submit it to. If you submit it to the government for reimbursement, they're probably just going to laugh at you. So that's not exactly what I think she's trying to say. The actual statement is we keep those receipts so that we can deduct them from your total income to get your taxable income. So any receipt can go against your taxable income and help lower your tax liability.
Another great tool is the 1031 exchange. So if you have invested in real estate beyond your personal home, there's a process for how you do this without getting crushed by capital gains taxes. And a lot of people use the verbiage like, let's just 1031 it. Right? It's like, I'm going to sell this and get this. So basically what it does is it allows you to sell one property that, again, is in your possession for your business or for an investment purpose, sell that one, and then go buy a new one, again, that you're using for the same purpose. It has to be a like kind property. And the proceeds from the sale must be held in escrow by a third party and then used towards the new property. But as long as you're channeling the profits into your next investment, you're in the clear and you don't have to pay capital gains on it. So it's awesome. Now, there are some time frames that you want to make sure that you have to identify the second property. You have to close within a certain amount of time. So make sure you do it all right, but it is a way that you don't pay taxes on that property.
Yep, so 1031 is a thing in real estate. So if you have real estate properties and you are looking to exchange them and get a different real estate property, then you can utilize this opportunity. However, this only works, like she said, if it's a like kind. So if you have a single family home that you're using as a rental property, then you can sell that single family home and buy a new single family home. But like she said, the biggest thing with this is one, timeline, and two, making sure that the funds are held in escrow. You have to declare the different properties that you're planning on using and a few other stipulations as well. So if you do want to utilize the 1031 exchange, I definitely recommend talking to someone who knows about the 1031 exchange. You don't want to do this, especially the first time, on your own.
And finally, there are literally dozens of random exemptions that you can apply for. So if you don't take the standard deduction, then you can move in and say, hey, are there things that I can actually deduct? And you actually can deduct more than the standard deduction. So you could look at self-funded classroom supplies if you're a teacher, moving expenses, medical expenses, student loan interest, dependent care costs, disability tax credit, home office expenses.
These are good tips, but she's calling them tax exemptions. These are tax deductions. So again, this is slightly different. So a tax exemption is more like you can exempt if you have a specific scenario that applies from you, you may not have to pay a certain type of tax. A tax deduction is something you can take against your taxable income to reduce your taxable income and therefore reduce the tax that you owe. Now, one thing that she mentioned is self-funded classroom supplies for teachers. That's true. It's also true if you homeschool your kids, you can be considered an educator. Moving expenses, on the other hand, generally has gone away. If you are a military person and you are moving, then that is an opportunity to deduct, but most individuals don't actually qualify for a moving deduction anymore. Medical expenses, that's true, as long as it's more than 7.5% of your adjusted gross income. Student loan interest, yes, that applies. However, there is a maximum. $2,500 is the cap on that one. Dependent care costs, yes, as long as your income is at a certain level, you might have different adjustments to your deduction for dependent care costs. Disability tax credits and home office expenses, yes, if those apply to you. So what she says at the end is basically that she has more videos sharing more information about taxes. So she does have a taxes made simple video, and maybe we'll address that one in a future video. But overall, I would say that she does seem to have an idea of what she's talking about. But always keep in mind that she is a professional when it comes to money management, budgeting, that kind of thing, and not necessarily about taxes. So if you see her or people like her on the internet, make sure that you double check the information that they provide with a tax professional so you don't end up in a situation that might be bad or difficult to get out of. So, well, thanks so much for spending a few minutes of your time with me today. I hope you have a fantastic day, and I will see you in the next video.